Alright, so in the last episode, we covered some reasons that you should upgrade your HDB to a condo as a form of climbing up the property ladder to build your wealth. But in today's episode, we'll take on the opposite approach. Why you should not upgrade your property. But ultimately, we can only provide opinions from our own biased experiences. The most important thing is you must make the decision your own. And if you have further questions, you can ask it in our 16,000 members Telegram group at Honey Money SG to answer your property questions right there. We discussed so many good points about the upgrading. I think let's move on to the other side. When should you not upgrade your property? I think this one is also another interesting topic because some of you're on the fence and you're thinking, sometimes I think of it, sometimes my wife tell me don't do it. Then how? That's why we are here to help you lah. First we talk about why you should upgrade. Then maybe now we talk about why you should not upgrade. Okay, I think let's start the ball rolling on. What is the main idea that people should not upgrade?
I think, just now we talked a lot about asset progression, right? For many people, like you, for example, you don't really have major plans to use real estate as your main wealth growing vehicle, right? Because for real estate, for most people, a lot of their money would be stuck in the house, right? But for some of us, we might not choose at different life stages, we might not choose real estate as our main wealth growing vehicle. So if you have other sources of investments or other places that can get you potentially same, higher or more stable yield, then you might not need to upgrade because your own HDB flat is used as shelter, right? It's used as a place for you to stay, for you to enjoy. So if you don't really need that lifestyle upgrade and you have other methods of building wealth, then you really don't need to use your property as your main asset progression tool. But there's so many tools these days.
I've been in conversation with some friends. They really are very apprehensive of investing in equities. They really cannot see the market go up and down. Then maybe property is a good way for them, for kind of forced savings for them. Because, they really are uncomfortable with equity really. Then where else, if they want to keep their money somewhere safe, low risk, and then they do not want to undergo like significant market fluctuations, and based on past history have shown very good results, then I guess upgrading to a property is a good option. At least it keeps the money out of their hands, out of their mind, and then they won't go anyhow spend it thinking they have a lot of money. Right. And I guess you can see in some clients as well because they really don't touch any other kinds of investment. So they put everything into their own property, even if they don't have like multiple properties, just that one single property. It's just another question on whether this is a good risk diversification or not lah. But
correct.
I feel that if you really do not have any other kinds of investments and you really do not want to touch other kinds of investment, having a good property, especially a private one, can at least help you preserve wealth. Or maybe if you're even luckier, help you grow wealth over the long term if the market and industry is with you.
Yeah, and if we look at historical returns for the past 50 years, it's very difficult to find a bad property, right? Because the Singapore market is just as such. Supply and demand is a huge thing when it comes to investments, right? When there's a lot of demand, stock price goes up, right? And there's too much supply, stock price goes down, right? So I think it's the same thing for property because our land here, our property here is just so scarce. It's generally very hard to lose a lot of money, which is why, like you said, some of your friends and my friends, they're not very comfortable investing in equities, right? Just like we're in July now and the market has run up like a crazy amount. But before this, the volatility is like really, really very hard to stomach, even for long-term passive investors, right? You see the news and things like that. Right. So property might be a decent option.
I think one point we touched about is like a substitute, something known as REITs. Okay, do you want to talk about REITs in this discussion?
Yeah, we can. So I think if you want exposure to real estate and you don't really want the hassle of choosing a unit, choosing a property, go and shop for property, then after that rent out to a tenant, manage a core tenant, then REITs might be a good option for you as a form of diversification from whatever asset that you like. It could be ETFs, it could be stocks, it could be Bitcoin, it could be like literally anything, gold, right? To diversify into REITs, because REITs is essentially you're buying into a group of properties, right? Yes, the return will very unlikely be as high as if you actually buy a real property yourself that you own and can control. But a REIT is actually a pretty good form of diversification if you want exposure to property.
Do you know that you can now transfer in SGX shares from CDP account to Momo SG custodian account? And here are 3 reasons why you should transfer to Momo SG. Number 1, lower trading fees. Trading fees at Momo is at 0.03% or 99 SG cents per order, with no dividend charges or corporate action charges, while outside brokers may charge a minimum of 10 Singapore dollars for CDP accounts. Number 2, easy transfer. Transferring SGX holdings from CDP or other brokers to Momo SG is now completely online and can be done via the app. You can do so by going to Accounts, Transfers, Transfer Stock in, SG Market, and select where you are transferring from. And number 3, reliable custody. Momo SG is licensed and regulated by MAS and is the first digital broker to receive SGX Group's full memberships across securities and derivatives markets. Furthermore, there is a transfer in promotion even for existing customers, where if you initiate a one-time transfer stock value of at least 10,000 Singapore dollars, you can receive 100 Singapore dollars of stock cash coupon, and even at the highest tier, you can get up to 1,000 stock cash coupon. For new Momo users who use my exclusive link to sign up, you can enjoy 30 days of 6.8% per annum guaranteed return promo worth up to 447 Singapore dollars. But as a disclaimer, please note that Momo Cash Plus is an investment product. This is not comparable and is different from savings deposits. Principal is not guaranteed, and up to 30 days of 6.8% per annum is guaranteed only during the promotional period. Furthermore, you will be able to unlock up to 4 stock bundles of the top 5 traded US stocks worth 70 Singapore dollars each, and 1 Apple share worth around 287 Singapore dollars. Sign up with my exclusive link for a bonus 20 Singapore dollars cash coupon. That's a total rewards value of 1,034 Singapore dollars. Holding period and buy trade applies. Investment in any capital market products involves risk and the risk to lose capital. For more details of the promotions, please refer to the link landing page in the description below. So wait no more and use my exclusive link or scan the QR code right here to get your Momo SG Universal account today. Yeah, I can see some commenter going to blast already. REIT is very different from property.
It is.
Yeah, we just want to make a disclaimer that it provides an alternative. It doesn't mean that it can fully replicate what a property does, because these two are totally different asset vehicles. But it's just that they are in a similar industry, which is real estate. Right? So let's be very clear on that.
Correct, agree.
Okay, what are the other factors that people should consider when they choose not to upgrade to a property?
So I think another thing is fluctuating interest rates.
Okay.
So for a lot of us, when we buy our first HDB, we are at the income level where we are most likely eligible to take a HDB loan, which has been 2.6% since the beginning. Hasn't really changed, right? So it's 0.1% above the prevailing CPF rate, right? Which is 2.5%, right? So, but when it comes to a private property, you do not have that option to take a HDB loan, right? There was a time when bank interest rates were super low. Yeah. So a lot of people went in to buy the property, 1.2% per annum kind of mortgage.
It was still 2022. Yeah, which is very recent only.
Yeah, so I know actually some people who went in and I think they over leveraged because the interest rates were so low.
Yeah.
Then now they are having a lot of trouble trying to upkeep their mortgage because now interest rates is no longer 1.2%, right? The lowest these days is like 2.8, 3.2%, right?
At one point it was 4 point something, which is very scary.
So okay, imagine at that time you refinance and then it's 4%, 4.2%. Man, your mortgage literally jumped by don't know how many times,
Right.
Yeah, so as someone staying in a HDB to get to enjoy that 2.6% interest is actually something that I think gives you peace of mind. Right? You don't need to worry that, what did Jerome Powell from the Fed say and affect my interest rates. Like HDB gives you, for now, 2.6% steady, pompipi, don't need to worry.
Yeah.
Right.
Yeah. I guess peace of mind is really very important. Some people, if you are experienced in property investing, you all would know how to handle such interest rate fluctuations according to the quantum, your principal, and your loan amount, how much you want to pay. But for these people who are new upgraders, they maybe don't even have the experience. Then let's say if last time the property market gave you like 1.5% interest rate, suddenly you need to refinance in year 2023 at a high of 4%. Sometimes you really cannot take it. And then what if you have other struggles and other challenges, like you are faced with a restructuring exercise from your company? Okay, all these are very relevant issues in your workplace that you may not even be aware of. So all these things comes all at once, challenges to your lifestyle. Then how are you going to manage all of it? Which is why sometimes if you really want that peace of mind, HDB may give you that little more breathing space compared to a private condo with a private bank loan, so to speak.
Yeah, so it really depends on the person. I like peace of mind when it comes to my own stay property, right?
Okay. Okay, next, I think we want to talk about the per square foot. Right. Why is HDB per square foot considered much more affordable than condo and becomes the reason why you should not upgrade?
At the end of the day, HDB is still a public housing, right? So, public housing versus private housing, definitely there will be a difference in the price per square foot. But I think it really boils down to the value, right? If we talk about the amount of space that you're getting, not necessarily you pay higher per square foot means you get a better space, because space is relative, is limited, right? So yes, certain condos do have certain layouts that is quite unique that maybe you pay a premium for in terms of the price per square foot. But generally speaking, if you're using it as your own stay property, the amount of value that the property gives you differs from person to person, and it's up to you whether you feel that the property that you're buying, whether it's HDB or condo, measures up to the value that you're paying. Just like today, if you want to buy a brand new condo, like nobody stayed before, one, like akin to BTOs, right? Newly built condos, if you don't have minimum 2.2, 2.3, even 2.5K PSF, you really don't need to buy anything, right? So some people are what I call PSF sensitive, right? And if you are PSF sensitive and you still have not really adapted to the new levels of PSF, and you're still stuck in the last time my father buy my condo for $500 PSF, but now the exact same condo selling for 2,000 PSF. Wow, but that's what appreciation looks like.
Yeah.
Right? So if you feel like it's not worth the value of paying $2,000 PSF, you'd rather go for HDB with a much more palatable price per square foot, then you feel like it gives you the same amount of value, which is a space that you can call home, then go for the one that you feel is more palatable to you. Like you don't have to upgrade just because everybody else is doing it.
I also had the impression when I was younger that because condos are so much more expensive, they must be very big, right? Then until I went my friend's condo,
So
very big.
yeah. So I have a friend, his name is Aaron Teo, and he's also a realtor like me. And he definitely is doing very, very well, and he can afford to upgrade to a condo. But he decided to upgrade to a EA instead, an executive apartment, because he got 4 kids and he just want a space. And if you want to buy a 4-bedroom condominium or 5-bedroom condominium, you're not going to pay the amount of money that you're paying for the EA, right? So to him, the value makes a lot of sense because I just want space for my kids to play, for them to run around, staying with my mother-in-law, So do you really need to pay 2,500 PSF, go and buy a 5-bedder and have the same amount of space? No, because for him, the value is in space, not the amenities, not the prestige, but space.
Yeah, it really different perspective from different people. Depends on what you really like. So really you make the decision for yourself though. Next one, I really want to talk about maybe like the high cash outlay. HDB compared to condo. How much of the difference are we talking about?
Right. Okay. So, during, sound very old, but during my time, when I bought my first HDB flat, the ratio was 95%, 5%. That means, right, I could take up to 95% loan at that time. Right? There was a time where it was like that. Do you remember during your time when you applying, how much the maximum amount of loan you can take?
Okay, I think it was 90%. 5% is because like you're under 30 or something. That's why they give you 5% down payment. And then the other 5% is on key collection. Then 90% loan disbursed.
Okay, so correction. So same for me. Yeah. So
the same era one.
Correct. Same for me. Yeah. But it's 90%. Right. But these days it's actually much lesser. It's 80%.
80%.
Right. That means your upfront for HDB is already around 20%. So if you think about it, it's actually not too far from the condo. Right, the LTV. But the difference is that the TDSR, which is 55%, versus the MSR, which is 30%, makes a little bit of difference on the cash outlay, the job that you have, the amount of income. So you really have to speak to your property agent or your financial advisor, whoever gives you financial advice, to really calculate. But generally speaking, the cash outlay for condo is generally higher, even though you can take a bigger loan because the quantum is naturally bigger.
Yes.
Yeah, so even though for HDB you give 20%, in condo you give 25%, like roughly speaking, the 25%, the absolute value of that 25% is probably much higher than the HDB.
Yes.
So if you feel like you don't really want to put down that huge amount of cash, you want to save up that money so that you can invest in other things, then maybe going for upgrading to a condo might not be the best decision. You can stick with the HDB.
Yeah. And there's also the idea that when you have that level of cash, and you want to pursue other things apart from your normal day job, you want to have that flexibility, that freedom. If you tie it down to a private property with a large down payment, then you are just locking your other doors and then focusing on one, which I wouldn't say is right or wrong. It's just that your own preference is that you want to focus fire on this route. And then you are closing off other doors, which some of you may want to look at financial independence, retire early. Some of you may want to look at developing a side hustle, starting out on YouTube like a YouTuber, or you want to do other side hustles apart from your day job. So that is really something that you all need to consider very carefully. Once you all put this cash away, it's not really for your use anymore. It's really you and your partner who is involved in this purchase need to be aligned. It's a life-changing decision.
Alright, yeah. Because of the illiquidity of real estate also, it's not saying you want to sell means you can sell immediately, unlike other asset classes. So it's something that you really need to consider.
Okay, what other things we need to talk about when you should not upgrade a property?
I think one of the most common and best reasons to not upgrade is that you see the HDB, it fulfills all your needs, right? Like, within 1 km got good primary school already, and then your neighbors are very friendly, you got the hawker center nearby, proximity to MRT, like it has already fulfilled all your needs as a happy family, then there is really no reason to upgrade, right? Because you're already happy, ma.
You're contented with the space, which I know a lot of people are really in this position, because nowadays HDB, they really have everything ready, right? Everywhere within walking distance and fully sheltered walkways. So it's really, you can just do everything within the town estate, unless you want to visit like larger shopping malls or you want to visit other places. If not, usually HDB, their estate is much more well developed than a condo estate, because condo estate, they may be further away from all these other things that are developed by the HDB.
I think it really depends on which area you're talking about. But yeah, I think one of the best reasons to stay is that you already love the place. And sometimes you get real estate agents knocking on the door and say, hey, you MOP already, have you thought about asset progression? And for some people, if especially real estate is not your main wealth building vehicle, you're using your home as a safe haven, you're investing your money elsewhere, then you really have no reason to upgrade if you're very happy with where you're staying at. Even though the lease might be decaying, yes, the value will drop at some point for sure because of lease decay, the Bala curve and everything. But what you're getting out of your own stay property is not money, but enjoyment and contentment, which arguably is sometimes more important than money.
Yeah.
Right?
True.
Yeah.
Yeah, sometimes it's about maybe giving your partner or your kids like this safe space that they can grow up with, and not having to change places every 3 years when you're talking about asset progression.
Correct.
Which is a huge hurdle to go through. We should cover in the last episode.
Yeah. Absolutely. Yeah. Carry on from what you say about this asset progression thing, there is a strategy that a lot of us employ that allows you to have asset progression with property without having to move every 3 to 5 years. But this strategy can only apply to people who have not bought their HDB. That means either you're a first timer or you're going to buy your second HDB, which is to buy the property as one owner and one essential occupier. Say you have you and your partner, you go in to buy as one owner and one essential occupier. So what this does is that the owner will own that HDB, whoever that is, maybe the husband or wife, and then the essential occupier's name is actually free to buy another property that is not HDB, must be private, after the 5 years MOP period. So what happens here is that if you feel confident enough that both of your jobs are stable enough and you have that progression, the first person will use his name to buy the HDB with the essential occupier, and only that person will pay for that house.
Correct.
In terms of the CPF usage, the loan can only use that person's, right? So that means your upfront stress might be quite a lot if the person is not making a lot of money. So it doesn't really apply to everybody, but if you feel confident to execute this, what happens is you will buy your HDB, that will be your own stay property. After 5 years MOP, your spouse, which is the essential occupier, can go and buy a investment condo, and then the one that you'll be flipping, right, will be the investment condo. So you actually don't need to move. You can just stay in your HDB.
Yeah. Regarding this strategy, I think we should talk about it in more details in a further episode, because I have a lot of opinions and ideas about this. Yeah, but regarding this, I think I want to put a disclaimer that make sure your relationship is very strong, because only the owner, which is the one paying for the house, will have that ownership rights. The other person, your spouse, will not have that ownership right. So some people may not favor this idea, right? Because what if things don't turn out well after the 5 years? After you are married, then you realize you are not for each other, then things may become very sour. So we need to put disclaimer to that as well.
Yes, definitely.
What is another option then? Because I heard of people going for second BTO. How many successful cases have you ever seen that happening? Because I know it's a very slim chance for second timers.
So I have seen people successfully apply for second BTO, but for me, whatever I'm going to say next is my personal opinion. I personally would like me and my clients to save their chance at a second BTO towards the end of our life. Because for me, I believe that right now we have the ability to have the energy to go out and do stuff. So whether we want to upgrade to a condo or we just want to stay in HDB and use our money to invest in other assets, I think that this is a time for us to grow our wealth, right? And at some point, when we want to retire, when we want to fire, we want to cash out on our assets, right? So that we can actually spend the hard work. So I do think that the second BTO should be, for me personally, the final property. Right? Unless you have stayed in a condo, you're too used to that lifestyle, you cannot go back to public housing, then yeah, maybe not.
Okay.
But if you want to cash out all your hard work, all your assets, and all the money that's locked up in your house, going for a second BTO towards the end of your life is really good, because number one, it's subsidized. That means you'll be paying much, much lower than market price kind of house, right? And at that point in time, very likely, your kids will have grown up, maybe you even have grandkids. You no longer need a 4-bedroom, 3-bedroom HDB flat, 2-bedroom HDB flat. You can go for one of those like 2-room flexi. They call it like, the 老人公寓. Right?
Oh, that is actually quite nice.
Yeah.
It's fully furnished if you pay the additional things lah.
Yeah, it is actually very, very nice. Like the neighbor that's staying the next block from me, the auntie, her son is staying in the next block and in a 4-room HDB flat. Then she has downgraded to the block beside him as a 2-room flexi. Yeah. Then they stay in the same estate, and the 2-room flexi is actually super nice. Yeah, because you stay alone. Husband has passed on, you don't need such a big space in your 70s or 80s, right? So you really get to enjoy, like the auntie is so enjoying life. Every time I see her, she say, I just came back from Dubai, I just went for holiday to Taiwan. So a house at the end of the day is a place that you seek shelter, it's shelter, it's a place that you call home. The amount of space towards the end of your life might not need to be very big.
Yeah.
So why not you save that second chance at BTO towards the end of your life? Because we all only got 2 chances.
Right.
If we use all of it already, then we don't really have much options, right? And I think you would agree that options is actually all we want in life. We want options.
Yeah. Sometimes when we do things and then we achieve this amount of money, it's because we want to choose whether we want to do something or not. Just like, for example, myself is leaving my job. It's an option. I could have left earlier, I could have left later, but it's just that I have this option. Also, the location where you want to work. So you want to have this option of whether you are able to upgrade or not. If you can even think of this option, you are in a very fortunate situation really. Because people who do not have enough money to put food on the table, they will not even consider this. So make sure whatever that we say today, go and discuss with your partner, your spouse, whoever is involved with the property decision, whether you should upgrade or not. Because that's your own personal finance situation and your own property kind of situation. But if you really want more professional advice, don't come and find me. Go and find him. Okay, he's the guy. He's the property guy, and I'll put his details right here. Y'all can go and contact him. JJ Ong, licensed realtor. Okay, so yeah, thanks JJ for coming to my show again.
Thank you, sir.
Yeah, I'm sure the next episode will have more questions to answer. So y'all just comment down below what kind of topic y'all want us to talk about property again. And then yes, we'll see you in the next property video.